Another great episode by yours truly, the author David. In this episode, we're going to be teaching you, I'm going to be teaching you how to trail your stops using IFVGs and how to enter continuations using IFVGs. This is the only video you're ever going to need for trading stop losses, knowing when to move your stop loss to break it even, and also knowing how you can catch continuations if you want to. I wouldn't advise it. However, if you feel as though you're confident about the move, you can simply use the IFVGs as continuations. The golden rule, as always, is pay attention. The reward of paying attention is you'll never have to watch this video more than once, especially if you're taking notes. The best way to take notes is using your hands, a pen and a paper, because the retention of knowledge is a lot higher and it increases your chances of memorabilia. I've already added a 432 Hertz in the background, so that increases your retention by about 30% in the brain activity. If you don't pay attention to this, if your phone goes off and you look at it, if you message someone in the middle of it, if you look left for just a second because maybe you might be bored of my voice, even though I know how good it sounds, go back and make sure you listen to it. Listen from where you stopped paying attention. And you need to always ask yourself when you're watching things, how does this contribute to my life? How can I leverage this information to accelerate my journey? If you pay attention to this, I'm about to save you months and years worth of unnecessary time and losses, so that you can finally get back to the things that you want to do, which is spending time with your loved ones and making profits. I'm also about to save you thousands of not losing money on blown accounts, because once you learn this, you've generally learned 3 things that you didn't know, which is continuations, trading stop loss, and moving your stop loss to break even. So let's get into it. Firstly, we're on a 4-hourly time frame. I don't think you can see it because I've cropped out that page. We are expecting higher prices. We've had a sell side redelivery to this BISI, which is a buy side imbalance, sell side inefficient. We can expect a reversal. How do we validate this? We always drop down to the lower time frame and we validate it by seeing the first presenting IFVG. That's it. So we're going to expect higher prices. So we'll drop down to the 5-minute now. Of course, it's a 2-step process in this case, which is the 4-hour. Let me type it out for you. It's the 4-hourly time frame. We use that as the parent flow to determine the higher time frame drawn liquidity, institutional order flow. To keep it simple, it's just to know, are we going up or are we going down? That's it. Bullish, bearish, no one cares. It's just simply, are we buying or are we selling? Are we pressing the buy button or are we pressing the sell button when we drop down to the lower time frame? Always remember, the higher time frame is the parent and the lower time frame is the child, but the child is always growing first. The child is going to validate the adult. Simple. Okay? You know, it's like when they say actions speak louder than words. Well, the word is to draw liquidity. Then you're going to wait on the action, and the action's on the lower time frame. That validates the word. Okay? And that's 5 minutes. Okay? Perfect. Now that we know we're bullish, IFVGs are ladder steps towards your higher time frame drawn liquidity. And with a ladder step, notice price isn't going to come below that ladder step. Sometimes, typically, it might. But majority of the time, the IFVGs hold as support towards your higher time frame bias and drawn liquidity. Remember, as we've said, the market only ever takes lows or highs and it seeks fair value. So we use the fair value gaps as bus stops towards the higher time frame drawn liquidity, which is determined on the higher time frame. Okay? So once we get the first presenting fair value gap in this scenario, notice, by the way, this is a 6 a.m. candle. So open low, we're expecting to close high. It's quite simple. It's a no-brainer. Once you get the first presenting IFVG, which is simply an old, in this scenario, an old FVG, bearish FVGs or SIBIs, being disrespected and displaced, you can expect a trend change. And for all the old IFVG, all the old FVGs, in this case a SIBI, to be used as support for higher prices. That is it. So now I'm going to enter this position, and then I'm going to show you about trading the stop. It's the IFVG. I'm going to mark this one out as well. As you can see, we had a retracement. Have we closed above it yet? Nope, we haven't. See that? We still haven't closed above to validate that next IFVG. Once we do, right here, you can move your stop loss to break even. You can even enter a second position if you want. Then, we go again. Remember, what's our draw on liquidity? This is our draw on liquidity, which I believe is a 1 to 3. Let me check for you guys. So I'm going to do you a disservice. Where did I put the stop loss about? Below the low. So 1 to 3. Whatever that is. I believe that's where I put the stop loss. If it's not, you're allowed to get onto me for moving the stop loss like that. Okay. As you can see, new IFVG created with the old SIBI being disrespected. Guaranteed it's going to be used as support. Price isn't coming below that IFVG. We've had another one. Can place a stop loss at break even now. And expect higher prices. And that's it. The IFVGs are ladder steps. Once the first presenting IFVG has formed, validating your higher time frame institutional order flow, higher time frame bias, every old FVG will be turned into IFVGs, and you can use them as continuations, and you can use them to trail your stop, or you can use them for re-entries. Also, of course, as you know, in a bearish market, the lows will be swept. The down close candles will be displaced and used as support. As you can see, down close candle, range expansion. Down close candle, range expansion. Down close candle into this one, range expansion. Down close candles, a series. This is an order block on a higher time frame, probably a 15-minute. Range expansion, order block, IFVG, range expansion. Down close candle, range expansion. Down into this order block, range expansion. You see, that's another one, but we don't need that. Focus on the IFVG video, and that's all for today. Life lesson, I want you all to know it is as simple as it looks. Don't let the marketing on Twitter make things look harder than they are. This game is very easy. If you follow everything I tell you, you will win. If you don't follow anything I tell you, you will lose. That's it. I'm right, you're wrong. I'm profitable, you're not. Anything I teach you is for your betterment. I know sometimes I can be harsh, but sometimes you need to hear the harsh truth. And the truth isn't harsh. The reason why it's harsh to people who can't accept the truth is because they're unwilling to accept reality. But the power of the truth is that it sets you free, because it sets you on a path of reality, so that now you can finally face what you needed to face in order to finally face yourself in the mirror and become the person you always wanted to be. Because the mirror doesn't smile until you do, which means you need to change yourself. And in the mirror, which is life that reflects the inner, externally, your life will change once you change internally. God bless. What's to come is better than what has been. If you maintain your faith, if you pray and believe you've received it, the Bible tells you will receive it. If you continue to show up every day and you dissect your wins, and you see how you can replicate your wins, and you learn your losses and you journal it with a pen or a paper, or you can use Notion, I can almost guarantee you, you're going to be in the 1% very soon. God bless. And always have a fixed RR for 1 to 3. I hope you live for as long as you want, and you never want for as long as you live. Amen.